Gold's been volatile. I saw on Friday it got knocked down again. It went back below 2,400. It got almost to 2,480 during the week, new all-time record high, and then sold off quite a bit on Friday. Same thing with silver. They knocked silver back below 30. In fact, intraday, again, it traded below 29. Just again, I think a great buying opportunity in the metals. The dollar also rallied a bit. Again, I think on the belief that Trump presidency is bullish for the dollar because it's going to mean bigger deficits and more inflation and therefore a tighter Fed. I think it's going to mean an easier Fed and more inflation, which is bad for the dollar and which is good for gold.
The Federal Reserve's monetary policy decisions are under intense scrutiny in the current economic landscape as inflation concerns persist and political pressures mount. Despite an uptick in inflation during the early months of 2024, economists anticipate a potential shift in the Fed's stance later this year. Financial experts, including Peter Schiff, CEO of Euro-Pacific Capital and founder of SchiffGold, predict that political pressure for monetary easing will intensify regardless of the election outcome. Schiff argues that rising unemployment rates will likely drive this push for looser policies. Fed officials align with this perspective. Fed Governor Christopher Waller and New York Fed President John Williams have hinted at a shortening timeline for potential policy easing. This shift in tone suggests that the Fed may be preparing to adjust its strategy in response to evolving economic conditions. However, the timing of rate cuts remains uncertain. While some analysts initially expected cuts in the first half of 2024, recent inflation data has pushed these projections back. Current forecasts now suggest the first rate cut could come as late as September 2024, provided inflation data shows sufficient progress. The potential impact of the upcoming U.S. presidential election adds another layer of complexity to the economic outlook. Schiff, known for his contrarian views, challenges the notion that a Trump presidency would strengthen the dollar. Instead, he argues that it could lead to more accessible Fed policies and higher inflation, potentially weakening the dollar while boosting gold prices. Indeed, gold markets have already shown sensitivity to political developments. Following President Biden's announcement of his withdrawal from the 2024 race, gold prices firmed as investors sought safe haven assets amidst political uncertainty. Please tune in for our exploration of Peter Schiff's expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. We appreciate your support.
During Trump's first term, there was a lot of optimism that ultimately faded because people thought Trump was going to come in and really cut government spending, balance the budget, because he ran on that. The first time he ran, he was going to shrink government. He was going to, pay down the debt, right? He's not going to do that anymore. He's just talking about growing the economy. If we just grow the economy fast enough, that'll take care of the debt. At this point, that's not even possible. The debt is too big. The debt is growing too much. And interest rates have to go up. One of the ironies of a lot of this is people think that Donald Trump winning is more inflationary than Biden because, he's going to stimulate the economy more with tax cuts. And so we're going to have more inflation. And for that reason, they bid up the dollar. People think the dollar is going to go up under Trump because now the Fed is going to have to raise rates more to fight the higher inflation that's going to come from the stronger growth or whatever they think that the Trump policies are going to result in. But the truth is, if we really are going to have more inflation, that's not bullish for the dollar. That's bearish for the dollar. More inflation, by definition, means dollars buy less. And if the dollar is going to lose more of its purchasing power, that's a reason to sell dollars, not to buy dollars. And the political pressure is going to continue to mount, regardless of the outcome of this election, on the Fed to ease monetary policy, to cut interest rates, to print more money, to relaunch QE, to prop up the economy. Because the unemployment rate is going to go up, regardless of the outcome of this election. That doesn't mean that the nation, is better off sticking with Biden or sticking with Harris, because I think things will get even worse. The problem is the Republicans getting the blame. But I've had these concerns for many election cycles, because I keep thinking that it's going to blow up. And we get through another 4 years and it doesn't happen because we keep kicking the can down the road. Well, again, eventually we can't kick it anymore. Somebody is going to get stuck with it. When it happens, the incumbent and the incumbent party, unfortunately, are going to get the lion's share of the blame for problems that have been built up over not only years, but decades. And both parties have had culpability as far as running up the debt. But it's going to be whoever happens to be at the helm of the ship when it hits the iceberg that is going to take the blame. Right now, Biden's getting the blame because it's a rough ride, but it's not nearly as rough as it's going to be. We'll see how the markets respond to the Republican convention, to Biden stepping down. Gold's been volatile. I saw on Friday it got knocked down again. It went back below 2,400. It got almost to 2,480 during the week, new all-time record high, and then sold off quite a bit on Friday. Same thing with silver. They knocked silver back below 30. In fact, intraday, again, it traded below 29. Just, again, I think a great buying opportunity in the metals. The dollar also rallied a bit. Again, I think on the belief that a Trump presidency is bullish for the dollar because it's going to mean bigger deficits and more inflation, and therefore a tighter Fed. I think it's going to mean an easier Fed and more inflation, which is bad for the dollar and which is good for gold.
As the 2024 presidential race heats up, former President Donald Trump has made bold economic promises a cornerstone of his campaign. Trump is pledging to swiftly end what he calls the inflation nightmare, assuring voters that his return to office would bring down prices very quickly. This message resonates with many Americans who continue to feel the pinch of higher living costs. However, economic experts like Peter Schiff are skeptical of these promises. Schiff criticizes Trump for offering what he sees as an oversimplified solution to complex financial issues. He argues that Trump is essentially promising voters that inflation will vanish immediately upon his election, a claim Schiff finds unrealistic. Trump's economic strategy includes controversial trade policies. He has proposed a 10% across-the-board tariff on all U.S. imports and a steep 60% tax on products from China. The 2024 Republican platform frames this approach as beneficial, suggesting, as tariffs on foreign producers go up, taxes on American workers, families and businesses can come down. Schiff takes issue with Trump's overly optimistic rhetoric. He contends that Trump is promising an instant economic transformation, promising to shift the country from what he describes as the worst economy ever to the greatest economy ever, simply by taking office. Let's get back to the interview.
Trump is wrong is in his promise of a quick fix. He basically told the nation that if he's elected, inflation is going to go away immediately. All you have to do is elect Trump, and the Biden inflation is going to disappear. No more inflation. The economy is going to boom. Real wages are going to rise. It's going to be a return to, unparalleled prosperity, right? We're going to go from the worst economy ever to the greatest economy ever. And all we need to do to get there is vote for Trump. And he just has to assume office. And just based on, the power of his presence, right? With whatever he's going to do, it's going to instantly transform the economy. Now, maybe people think that, Trump could work miracles because, he's like Moses and has got a staff because God just saved him from that bullet. I don't know. A lot of bad things have got to happen, and they may happen on Trump's watch. I mean, I could be optimistic about America's best days being in front of us. But if that's going to be true, there's a lot of bad days that are going to be between now and then that are also in front of us. The other saying that comes to mind is no pain, no gain. We have a lot of problems that need to be fixed, and fixing them means pain, means things get worse before they get better. But Trump is not promising that or acknowledging that. He's saying they're just going to get better immediately. And so when he's elected, it's going to be very difficult for him to ask Americans to swallow the bitter tasting medicine that he promised they were never going to taste, that everything was going to be great once he got elected, that inflation was going to go away. It's going to get worse. Inflation is going to be worse in Trump's term than it was in Biden's. Now, it's not necessarily because of what Trump is doing. That's just what was going to happen anyway. Now, had Donald Trump won a second term, or maybe he did win, but he just didn't get the votes officially. But had he served another term, inflation would have reared its head the same, because the inflation chickens were already out there. They just came home to roost on Biden. But some of those chickens had Trump's name on them, right? Trump was part of it. So inflation problem is going to get much, much worse in the years ahead. Doesn't matter who's going to win. And, if you look at what was talked about, they didn't talk about the debt very often. It was barely mentioned. In fact, of all the conventions that I can recall, the debt was talked about the least. And one of the reasons that Trump couldn't talk about the debt is because he helped run it up, right? So he really can't make the debt an issue when he's part of that problem. But the debt has never been a bigger problem than it is right now, and it's never been discussed as little as it just was. And I'm sure it's not going to be discussed very much at all at the Democratic National Convention that's going to come up in a couple of weeks. And so at the point in time where the debt has never been a bigger problem or more dangerous is when there's the least amount of discussion. And that's not an accident, because nobody wants to discuss it because the problem is so bad. And there is no pain-free solution that the voters can be promised. So everybody just ignore it. Forget about it. Doesn't even matter. There is nothing in this convention about the fact that the country is suffering from decades of excess government spending and excess government regulation. And as a result of that, the economy is a mess. And it's going to take time to repair the damage. But in so doing, rates have to go up. Donald Trump is promising lower interest rates. In fact, he's promising the immediate end of inflation and lower interest rates. How is he going to deliver what might appear to be mutually exclusive promises? Because if we're going to immediately slash interest rates, how is that going to happen? The Fed's going to have to print more money to do that. The Fed's going to have to increase quantitative easing. That's the only way they're going to get interest rates down. Well, that's going to push inflation up. Right? Trump is promising low interest rates and low inflation. How are we going to get that with all this debt? He's not talking about cutting any government spending. The only thing he talks about is changing where the money is spent. He's not talking about cuts to government spending. He's talking about tax cuts. In fact, one of the things he's talking about is, eliminating the tax on tips for waiters and waitresses, or I guess anybody who gets a tip.
Many market analysts view President Biden's decision to withdraw from the 2024 presidential race as a potentially positive development for gold prices in the coming months. This perspective is based on the idea that Biden's exit introduces an additional element of uncertainty into an already unpredictable election landscape. How might the increasing political uncertainty in the upcoming U.S. presidential election and ongoing economic challenges reshape investor sentiment towards gold and other safe haven assets in the coming months? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.